Hi there, good morning viewers. You're watching Buy Now Sell Now on ET Now with me Snehi Shah. With me is Cheryl D'Souza. In this show, we're going to be addressing all your stock queries that you will be writing to us on the number that will be flashing on the top of the screen very soon. Remember to keep writing to us. Be specific about the stock you hold or any questions you have about the stock that you want to hold, the timeline you wish to hold it for, or if you already have the holding and you want a view on what to do, please mention your quantity as well as your buy price and the risk appetite or the timeline that you wish to hold the stock for. With that, let's get kick-started on the show. But before that, Cheryl, let's take a look at the markets.
Yes, very good morning to you, Snehi. And if you look at the markets, I think we are in that similar shades of red. That's what the market is also right now donning. If you look at it near the day's lowest point, when you talk of the benchmark indices, 0.7% downtick coming in for the benchmarks. It's Nifty Bank also that is trending a bit lower in trade today. Advanced decline ratio, that is looking pretty dismal in trade today. About 2,129 stocks that are declining against 437 stocks that are gaining. When you talk about the NSE, the rupee as well is not supportive. We've plunged to fresh record low. When you talk about the currency as well, we are inching closer to the 88 to the dollar mark. So yes, no respite coming in on that particular front as well. But yes, you have to notice that we have actually eased or strengthened from the day's lowest point, 87.94 at one point in time. That's where the currency was. Now it is around 87.63 to the dollar. Let's talk about the list of stocks that are gaining and losing today in trade. If you look at Britannia, that's the top gainer on the Nifty, followed by a Tata Consumer, HUL. So you have the consumption pack or the FMCG pack to be in, actually case in point to be pretty healthy in trade today. So all of them are gaining in trade. Then you have mild gains coming in for Kotak Mahindra Bank and M&M. While on the flip side, it is the metal sector that's down and out in trade today, not just in India, but across the world as well, on the back of the Trump tariff threat. Once again, 25% tariff on steel and aluminium exporters across the world is what he has actually said. And the tariffs will be imposed as early as today. And that's the reason why you have the metal counters under pressure. Tata Steel, JSW Steel, Hindalco among the top losers on the Nifty. You also have Power Grid and ONGC that are a bit weak in trade today. Talking about the sectoral indices then, a mild positive move coming in for FMCG index thanks to what Tata Consumer, HUL and Britannia are doing. But if you look at the sectoral print, metals, realty, top sectoral losers, followed by pharma also is weak in trade today. Oil and gas is weak in trade. And the broader markets getting hammered out of shape once again, Snehi.
Absolutely, that's the market construct right now. Not looking very optimistic or promising for our markets right now, but we do have the second half of the trading session. We can hope for some recovery. But on that note, let's welcome our guests on the show today to discuss all your stock-specific queries. In the studio, joining us is Kunal Bothra, and we also have Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us on the show. Good morning to both of you, gentlemen. Kunal, let's begin with you. We have our queries that have started to pour in now, and the first query is coming in from Mr. Arunacham Balaji, who's writing to us from Tamil Nadu, and he's a senior citizen. He's asking that he has 700 shares of BHEL at 234 is the price that he has bought these. He's sitting at a loss of 20,600 rupees right now. He's asking if he should go ahead and book his loss right now because that stock is reaching the 215 levels is what he's saying, or now that he has seen a slight bit of a dip on the stock would now be a time to accumulate and rather average his holding than completely exiting it. What is your view when it comes to BHEL?
Good morning. My belief is that I think you should hold on to the stock as of now. Now, I think sub 200 levels, the recent low for BHEL was around the 180, 185 mark. That was a very good zone for averaging out because the stock indicators were deeply oversold. I remember I think flagging the stock close to that zone where the RSIs had hit oversold territories. The volumes were at a point when the stock had come back into a deep corrective phase, and I think also on the weekly or rather on the monthly charts, the stock neared a major retracement or completed a major retracement support. Now I think closer to 200, 205 levels where the stock is trading. I would suggest to just hold on to the stock. In case if the market say deteriorates over the next couple of days, there could be a minor correction which could be at play for BHEL, and maybe the stock can come back to 190, 195 zone. That could be again a good territory where you can look to average further, but as of now, hold.
All right, the next query that I have is coming from Lalit. He's writing to us from Hyderabad. He wants to know about Greenply Industries. Is it a good stock to go ahead and look to put in money? What's your take on this, Gaurang? Very good morning, Kunal and Gaurang, firstly.
Thank you, Cheryl. Morning to you and morning to everyone. Well, so this is a building material supply and it has an ancillary play, Cheryl, if you will, to what the real estate sector is doing. Uh, Home decor or re-decor market is also a very big opportunity for companies like Greenply Industry. We have a positive coverage on that. We have a hold and a buy recommendation from a long-term point of view. But keep your time horizon a little bit longish, maybe about 1.5 to 2 years, because the positivities to play in to what happens to real estate sector and then the ancillary plays like Greenply Industries will take a little bit of time. So if you have that kind of horizon, definitely hold or you can buy from that kind of a time horizon.
Okay, Gaurang, coming back to you, our next query is coming in from Bharatwaj from Coimbatore. He's writing to us and says he has 1,320 shares of Exide at an average buy price of 427 rupees. He's asking if he can buy more at the current market price, and he says he's a long-term investor, so there's no urgency to liquidate or do anything. He's ready to hold it for some time more, but would now be a good time to accumulate a little bit more of this?
Is that look, if you have a long-term time horizon and if you have invested in fundamentally sound stock, then price erosion or price corrections in market or in that particular investment or stock should not be a deterrent to you. In fact, you should use these kind of dips to increase your holding in case if you have the investable amount and it is not exposing your overall investment to a particular limit, a diversified portfolio. That's what I'm talking about. So on Exide Industries, I think it's a great auto ancillary play, OEM segment, battery manufacturing company. Honorable Finance Minister has also elaborated on in her speech as to what the government plans for EV and for the automobile sector overall. So you have two positive effects. One is the new order market, that is the new launches that happens, and a dedicated agreement between the automobile manufacturing company and battery manufacturing companies. And second is the replacement market, which is also a big opportunity. So hold on, and yeah, I mean at 375 or dips closer to between 350 and 375, I think it would be a relatively comfortable zone to average from a long-term point of view.
Right, the next one is coming from Sri. He's writing to us from Bangalore. Kunal, for you about Dixon Tech, about 20 shares at the price of 17,500. Mazagon Dock, 200 shares at a price of 2,400. At this price, do you think our viewer should go ahead and average down the cost of his buy price for both of these counters? What sort of a short-term target should he look at for both Dixon Tech as well as Mazagon? Actually, it's been a while we've seen Dixon Tech at the 17,500 levels, right? I was like amazed looking at the stock price. What's your take? What should our viewer do now?
Yeah, it's been quite some time, that Dixon has corrected, and also I think in that sense, the correction for Mazagon Dock has been more relatively, I would say, feeble, or the stock has been very strong in that sense with respect to the other peers. Now, interestingly, I think Dixon has come back towards a retest of the long-term average, which I think is lying closer to 14,000, 14,500 zone for Dixon. So I believe that's a good territory where you can look to hold on or accumulate the stock from a long-term basis. Mazagon Dock, on the other hand, the stock has been relatively strong. The correction was not as sharp, as severe as compared to many of the other peers in the similar space. So I think in that sense also the stock is showing a tad bit of more relative outperformance. So I think in that sense the stock looks attractive, and I would suggest a buy on both of these names.
On Dixon as well as Mazagon Dock. Gaurang, coming to you, next query coming in from our viewer Nikhil, who's writing to us from Mumbai. He says he has 20 shares of Tata Motors at a price of 990 rupees per share. He is currently facing a loss. Should he go ahead and book loss and go for some other company right now? Should he switch his holdings or stay put where he is right now?
Well, so you are spoiled for choice actually in the four-wheelers passenger vehicle space, to be very honest. You have a stock like M&M, which has hit an all-time high, if I'm not mistaken, this today, on fallback of the numbers that they have delivered. You have great numbers from Maruti as well. Tata Motors, on the flip side, was a little bit disappointing when you compare, M&M, Maruti to Tata Motors numbers. But we remain positive on all these three names. I think from where the stock is trading close to 700, your downside is extremely protected. Long-term point of view, hold on to it. We have a target of in excess of 850. These are very conservative targets. Earnings are likely to turn around. JLR manufactured in India, in Gujarat, in Sanand plant will be a great volume booster for profit margins because it's a high-end product And if you manufacture in India, your cost is relatively lower, your margin expands. Commercial vehicle is doing well, passenger vehicles is doing well. So I would say don't be in a hurry. You have given time to your investment. Give a little bit more time. If you have investable amount, maybe sub 700 would be a good zone to average. Or even if somebody wants to make a fresh investment.
All right, so that's the take coming in on Tata Motors. On that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and we are live from Motilal Oswal studio. So let me start taking, or rather continue taking your queries that have been pouring in already. And the next query that I have is coming from Sriram. Wants to know about IFCI 3000 share at a price of 141. Should a viewer hold on to this counter? No urgency to liquidate is what he's saying. What's your take on this one, Gaurang?
This is going to be difficult for me because we know the past history of IFCI Limited and the kind of destruction in wealth for not only 1, 2, 3 years, but you take a very longish performance of this particular. Even on the earnings front, fundamentally, I don't think anything positive is there to make us initiate any kind of coverage on IFCI. We don't have coverage, Shalil, and then I won't be in a position to give a direct buy, sell, and hold, but as an alternative investment idea in the finance, banking side, private sector, small bank, IDFC First Bank. I know there were challenges in the third quarter numbers, there were challenges in the second quarter numbers for IDFC First Bank, but the management commentary and the performance and improvement, scope of improvement, this looks extremely clear and visible. So, if I was there, I would rather opt for IDFC First Bank. On IDFC, we don't have any specific coverage.
IFCI is the counter. Kunal, IFCI, anything on the charts that you can say? Because yes, this has had a trouble in between. But what's your take on this? 141 is the buy price. What should viewer do then?
So I'm not sure whether 141, is because 141. I think the price what I can see on the charts was something in 2007-8. So I'm not sure whether you've purchased that.
He's saying he's a long-term investor. So I would like to give him that benefit of doubt that he's actually held on to it during the trouble time also.
Yeah, that's what. So I think now the question is that if you've invested into the stock for the last 17 years or so, and you've stayed put with the stock, I don't see that you should probably fret away with this kind of a market volatility, because there could be a point where these PSU stocks which have done reasonably well over the last 2-3 years, they're going through a profit booking mode, and there could be a zone where over the next 1 to 2 years these stocks can make a very strong comeback, and same would be the case with IFCI. So since I'm assuming that if you are a very, very long term investor, then I would suggest to stay put with IFCI.
Okay, stay put is the call coming in on IFCI. Shriram, we hope that answers your query. But let's move on. Kunal, next query coming for you. This is from Mr. Subrata Mukherjee writing to us from Kolkata, and he's asking, in this market, is it a right time to buy Glaxo Pharma and ITC for investment? What's your view on both of these on the charts?
Yeah, I think both these charts are very lucrative. Glaxo, I think we discussed last week that the stock had given a price volume breakout, and especially I think after the back of on the back of the results for the stock. So price wise, the pattern wise, it looks very attractive. The only concern which happens is that these stocks, they lack an immediate degree of momentum. So there is a lot of sideways and range these stocks go into, or mild corrections. So patience could be tested. Since I'm assuming that you are a medium to long term investor, I would suggest that both ITC as well as Glaxo could be good bets from long term play.
All right, so that's the take coming in on GSK Pharma. Let me take this next query then, and this one is coming in from Ram Rao from Pune, and he wants to know about Bajaj Finance. He's holding about 2,240 shares since its listing. Wants to know for how long should he hold on to this? What's your take, Gaurang? Can you give a timeline for Bajaj Finance? For how long do you think, till how long you should hold on to this one?
Well, you don't need to worry, Sharil. You bought it at IPO, if I'm right. I heard it right.
Yes.
So, you don't have anything to cry for, right? You would have got your capital back by now. So your cost of investment is virtually zero. We have a positive coverage on Bajaj Finance, and this is one of the star performer if you actually go to see in the NBFC category. There was concern, but I think in the last fiscal, with terms of the business commentary and business outlook that they had mentioned, but from those times and levels, the management has put a decisive strategy in place, and that is augured extremely well. on the business front and translating that into the earnings that they delivered. Uh, I don't see any reason. I mean, what I could only say is, though we have positive coverage on the buy side on Bajaj Finance, if you're really worried, bring home your capital. I'm sure you would have got your capital back by virtue of dividend, etc., or any kind of the bonuses, etc., that would have been announced since the time you held the share from the IPO time. Unless, I mean, I don't think you need to do any changes. Just hold on to it and ride the upside.
Tough question only to Gaurang. Let me come to you, Kunal. Let me ask you, for how long should he hold on to Bajaj Finance? Gaurang has been kind enough only to use the word he's got back his capital. He's got back his capital and much, much more than that. You said somewhere around 1994, 95 is when Bajaj Finance listed on the bourses?
Yeah, the price history suggests that the 94, 95 is where the stock had listed.
And price? By any chance, for all of us, most of us, I know that both of us sitting in the studio
We
here,
are very interested to know.
we wouldn't know about it.
So there was some special situations into the prices, but then I think adjusted to that, it was almost 20 rupees where the stock had listed.
Wow.
Oh, okay.
So 20 became 2 rupees in the span of the first 3 years of listing for Bajaj Finance, and then from 2 the stock is now at 8,000 plus.
So for how long should you hold on to it?
I don't know. I mean, even if you get a partial dividend, I think you can recover your cost of 2 rupees as your investment. So I think it's a good stock. You can continue to hold on. I don't see a timeline to this stock because even if I look at this over the last 2-3 months or so, or the last 5-6 months of this market volatility, the stock has been absolutely strong and one of the few rare stocks from the entire financial space which has actually come back towards a life high breakout about the 8,000 plus levels in this leg of the market uptrend. So market volatility. So I believe that it's a sign that the stock is still very strong, and I think these are gems in your portfolios, and I don't see any reason why you should sell them.
Okay, well, good call coming in on Bajaj Finance and at a buy price of 2 rupees. Cheryl, I wonder why we did not get it. I probably wasn't even born.
Yeah, I was just going to tell that, Snehi, but I would not want to divulge whether I was there or no. But yeah, yes, Bajaj Finance, and yes, gem of a stock that you have in your portfolio, and you cannot give a timeline to such sort of companies that you hold into your portfolio, given the fact their quality, their marquee names, and they have consensus thumbs up, not only from Gaurang, from Kunal, but a lot of other marquee analysts and experts in the market. But on that note, let us slip into a break. When we come back, more queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and we are coming live to you from Motilal Oswal studio. Let me actually continue taking the queries then, and this one is coming from Mahesh, and he's a senior citizen from Delhi. Kunal, this one is for you. He's a big fan of you. He makes sure that he's watching you in the opening, the closing show, as well as on the 11 o'clock show. And he wants to know about Biocon. He has about 540 shares at a price of 321. Laurus Labs at a price of around 432 rupees per share. He's making short-term gains on both of these counters. Do you think that these counters are a hold or an exit at this point in time? He's saying that a holding period is not a problem. If hold, then it's great. But if no, then where should he deploy the funds?
First of all, thank you so much for that. Now, on both the queries, Biocon as well as Laurus Lab, now since you're sitting on good profits, I would suggest to just trail your stop losses to maybe cost prices for both of these names, and then continue to hold on. Because what we are seeing as a differentiated trend for Biocon and Laurus Lab is that these stocks have started to come back into their respective uptrending mode. Yes, these stocks have faced a lot of supply, there is a lot of resistance, and for example, Biocon has been unable to break past about the 400 levels. Laurus Lab, I think, has been facing resistance around the 640, 650 mark. I think on Friday, if I'm not wrong, the stock made a high of 640 thereabouts, and then from there it's retraced back towards 620 levels. But I believe that it's a matter of time that these stocks eventually would get back into their breakout modes, and whenever that happens, you can expect at least a further 8 to 10% rally on both of these names. So very interesting charts for both of these stocks. As of now, I would suggest to hold on to the stock, keeping a stop loss trail to the cost prices of what you have.
Okay, hold coming in on both Biocon as well as Laurus Labs. Gaurang, coming to you, we have our next query coming in from our viewer, Mr. Venkatesh, who's writing to us from Indonesia, and he has accumulated JSW Infra, wants to plan to hold for 2 years more. He has 300 shares at a price of 310 rupees. Do you think he should continue holding this stock?
Well, so we don't have a standalone recommendation right now on JSW Infra, but we had covered JSW Infra during the IPO. This is some time back, and that time I think the floor was much lower than compared to where the stock price is right now or the price that he acquired. So I'll keep the IPO note as a base, and fundamentally long term is 1.5, 2 years, 3 years plus. This company is into port logistics, and it has done quite a lot in terms of expansion, both where it operates in the Middle East in a big way and in India in terms of container handling and capex. So if I have to make that IPO note as a base from a long-term point of view, hold on to it. And we expect the port business in India to pick up steam with the kind of focus that the government has to increase ports in India as well as to have a big export hub.
Okay, Gaurang, thanks for that view coming in. Kunal, coming to you, we have Mr. Rajashekhar, aged 65 years, writing to us from Bengaluru. He plans to buy NMDC. He's asking if now is a good time to make a fresh entry into the stock. He's a long-time investor, so there is no bar on his holding period. But does NMDC look attractive on the charts right now?
Yeah, it looks attractive. In fact, with this recent 30% plus kind of a correction from 1992 levels for NMDC towards 64 odd mark, where the 60 odd mark where the stock has made a low, I think I would suggest that the stock has come back into a decent territory where long-term investors should start to venture into the stock price. Yes, there could be some bit of short-term volatility, but that should not deter long-term investors, especially for someone like you. My assumption is that you're looking at a value buy, and especially I think these kind of price territories are the ones which should attract long-term investors. So I would suggest a buy given your profile as well as your risk appetite.
Okay, so buy call coming in on NMDC. Gaurang, coming to you, we have Mr. Hamsa writing to us from Madurai and holds 2,700 shares of Dr. Reddy's Laboratories at an average price of 1,370 rupees. Pardon me. He's asking if he should buy more at the current market price. He's also a long-term investor. So, what is your view when it comes to Dr. Reddy's?
Have a coverage on Dr. Reddy's, but like I mentioned, in my opening remarks, that don't overexpose to a particular sector or a stock in a portfolio, which may possibly tilt the risk to unfavorable levels. But in case if that exposure is not much, then I would definitely, as a disclosure, we do have a hold and a buy recommendation on Dr. Reddy's Laboratories from a long-term point of view. And my sense is that pharma as a sector is likely to do well despite of the headwinds that it is facing right now.
Okay, so looking good, and let's move on, talk about the next query coming in. That's coming in from our viewer. We have Mr. Satya writing to us, and he's Kunal, this query is coming for you specifically. He's asking if he can average M&M Finance for the next 1 year time frame. If not, then which one should he look at buying if not M&M Finance? And what's the view on M&M Finance?
I think I would suggest to buy or even average further for M&M Finance. I'm not sure what's your initial purchase price, but I think even at current levels of 290 thereabouts, there is a strong confirmation on the charts that the stock has broken past about the 200 DMA. There has been almost like a range breakout for M&M Finance. 255 and 285 thereabouts is the range for M&M Finance, and the stock has broken past about this level. So there have been a lot of confirmation triggers for the stock on the short-term basis, and then we look at the other peers like Bajaj Finance, etc., where many of these stocks have given breakouts and they've emerged to be sector leaders. So when a sector starts to look attractive, when there are identifiable few leaders from the entire sector, then eventually many of these underperformers, they also get a leg up, and then the sector gets a lot of demarcation to which are the stocks which are strong outperformers and which are the ones which are catching up. I believe M&M Finance is the one which is trying to play a good catch up from the entire sector. I would suggest a buy as well as even an average at current levels.
Okay, looking good when it comes to M&M Financial. We have our next query coming in. We don't have the viewer's name, but they're asking, they have 100 stocks of Infosys at 1,450 rupees. Gaurang, what are you making of this company? And he's asking if he can book profit and buy any other stocks if you could recommend, if not Infosys. But when it comes to the entire IT pack, what are you making of Infosys? We are hearing some trouble regarding layoffs on the fundamental front. Tell us what is your view on Infosys and if this is how you would like to play the IT pack.
So I think layoffs and increasing headcounts are totally dependent on what the management feels in terms of the business scope and capability. I would not read too much into this. As a disclosure, we do have a positive coverage on Infosys. Our targets are in excess of 2,000 rupees. So I don't think you should be in any kind of hurry to sell out Infosys and try to look at any other stock. And in terms of earning visibility, I think a lot has changed over the last couple of quarters and years in terms of financials for IT sector. I don't know what is going to come out of US in terms of President Trump's statements, but minus the US, there are a lot of opportunity for IT sector within India as well as the rest of the world minus US. So I would say hold on to Infosys and look for targets of in excess of 2,000 rupees.
That's the take on Infosys. But on that note, we'll slip into a very short break on Buy Now, Sell Now. And viewers, keep writing your queries and we'll address them just after this very short break. So we'll be right back. You stay tuned. Hi there, welcome back viewers. You're watching Buy Now Sell Now on ET now. Let's keep it going with all your viewer queries. Kunal, coming to you. Our next query is coming in from our viewer Karthikeyan from Kerala. He's asking from a technical point of view, do the charts indicate that this is the right time to buy Alkem Labs for a holding of more than 3 years? 3+ years is what he aims to hold Alkem Labs for. Tell us if it's looking attractive on the charts and if this time frame is also healthy enough for the stock.
Yeah, I think the time frame is healthy enough for the stock, but I think the price may not be, because the stock is still not showing signs of any kind of a bottoming out. There is neither a zone where the stock indicators are looking a lot more oversold. So in fact, today is where you've seen the first day where the indicators are actually showing signs of a restart on the bearish side or of the trend for Alkem Labs. Yes, the prices have corrected in the last 2 days from 5,300 levels to 4,800 mark, which means a decent 10% correction. But then after such kind of a indicator move, we generally expect that the stock gets into a process of a bounce for a couple of days and then resumes the correction on the downside. So it may be a good stock from a long-term play, but the price point may not be very attractive, and it still looks like that the selling is not over. Maybe over the next 2 or 3 days, in case if there is any further correction of say 200 to 50 points further for the stock, say closer to 45,000-46,000 mark, that could be a good territory when we look to start entry.
Okay, those are the levels to watch out for Alkem Labs and also the attractive price that Kunal has suggested to buy into the stock. Gaurang, coming to you, next query coming in from our viewer, Mr. Subramanian from Chennai. He is writing to us that he has 30 shares of Praj Industries bought in at a price of 320 rupees per share. He's asking if we should keep this stock for more time or sell it on a profit and shift to some other stock of your recommendation. What's the outlook when it comes to Praj?
Though we don't cover Praj Industries on the fundamental side, so I won't give a buy, sell, and hold. But there's one thing that I always want to say, that the way making investment is an art, booking profit is also an art. So you need to have both within you. And when the market is giving you, you should definitely take it in terms of what your estimates or what you had set aside in terms of what kind of returns that you want to make. So just in case if the investor wants to book out of Praj and wants to make a fresh investment elsewhere, then I mentioned Tata Motors. We are positive over here in terms of banking stock, public sector. State Bank of India also looks quite attractive from a long-term point of view.
Okay, so that's your outlook, not specifically on Praj Industries. Kunal, if you could just give us a quick check on what you are making of Praj on the charts. Is the show stock looking sweet enough?
Well, not exactly. In fact, on the longer term charts, there has been first signs of weakness which is emerging into Praj, and I think the stock has also confirmed a breakdown below its 2024 June July lows, which is closer to that 700 mark, 680 levels for Praj. The stock has also broken below its 200 moving average, and on the weekly charts, the indicators are suggesting that the downtrend may continue for the stock for some more time. So there could be a process where the stock may bounce back to 660, 680 levels, but from a medium to long term basis, it looks like that the stock has not yet settled, and it may take some bit of more time for the stock to settle and get back into a decent price range.
Okay, so So that's your take on Praj Industries. Kunal, next query also coming in specifically for you. This is from our viewer Vijay Kirti from Chennai, writing to us that they hold 600 shares of Container Corp, which is Concor, bought at a price of 1,059 rupees, currently seeing a loss of 30% from where they had bought it. What's the recommendation going ahead? Time to completely book losses, get out of the stock, or hold, hoping for some sort of recovery, or just buy more at this price to average their holding?
No, definitely not buy more, because I think you need to buy when the stock shows signs of confidence. As of now, the confidence is not there, and that's why over the last, I think, as I'm looking at the charts, over the last 8 months or so, the stock has seen successive price corrections. This is the eighth month consecutive price downtick for Concor, and the stock has fallen from 1100 plus levels to now just 700 thereabouts for the stock. Even on the monthly chart, the stock has been consistently forming a pattern of lower highs and lower lows. So I think on the back of this, my expectation is that the stock, price could continue to deteriorate. The only positive aspect about the charts for Concor is that after such kind of 8 consecutive months of downtrend, there is bound to be a point when the stock comes back into a short covering mode. That could take the stock back towards say 780, 800 plus mark also. That could be a point where you may actually look to exit the stock, or maybe a sell on rallies is what I would advise for Concor.
Okay, so that's the view coming in on Concor. Gaurang, pardon me, coming to you. We have a next query coming in from Mr. Chandrasekharan, writing to us from Chennai. He's holding 500 shares of Quess Corp at an average price of 845 rupees per share, and also holding Birlasoft 100 shares at an average price of 705. Asking if he can hold Quess Corp for 1 year and Birlasoft for the next 6 months at the current price, or should he look to exit the stock? What's your view on both of them?
Honestly, I'll give it a pass. I'll give it to Kunal because we don't cover either of these stocks.
Okay, so Kunal, coming to you, Quess Corp and Birlasoft, how are they looking on the charts?
So not attractive. Quess, in fact, Birlasoft, for example, the stock has gone through a very sharp correction much prior to when the market started to correct. I think Jan 2024 is where Birlasoft made a high of 850, and from there the stock has been consistently dragging. My sense is that the stock should continue to correct further, at least on the short-term charts. Maybe closer to 455, 475 could be a good territory in case the stock happens to reach those kind of levels. For Quess Corp also, I think on the short-term charts, it seems like that the stock is continuing to go into a downtrending mode. I would not say a major sell-off, but a downtrending mode. This downtrend should take the stock back towards the sub 600 mark. That could be a decent price point if you look to average further.
So that's the take on both Quess Corp and the other stock. But on that note, Gaurang and Kunal, thank you so much for joining us. Viewers, that was the last of the query coming in from you that we could address on this show. But keep writing to us, and we'll be joined by our experts once again tomorrow to address all your viewer queries as well. So keep writing to us. Don't forget to mention the specifics of your stock that you hold, the buy price, and your outlook in the question going ahead. But let's talk about the India Energy Week, because in the lead up to that event this year, India's position in the global energy markets has been a topic of significant discussion. The country continues to navigate complex international dynamics to secure affordable and reliable energy supplies for its populace. Set to commence on the 11th of this month at Yashobhoomi Dwarka in New Delhi, India Energy Week 2025 will highlight energy access, security, affordability and sustainability while encouraging cross-border cooperation and collaboration. At a recent press conference, Union Minister for Petroleum and Natural Gas Hardeep Singh Puri shed light on India's approach to engaging with global energy suppliers and the strategies employed to mitigate market volatility. He also touched upon the importance of diversifying energy sources to ensure long-term stability. Here's his insights on India's proactive measures in the global energy arena.
The Prime Minister's commitment is to making energy available at all times in the most affordable manner, along with transition to green energy. Okay? So we are not committed to buying any quantity from anyone. We are committed to buying the most economically priced energy of the grade of crude that you want at all points of time. Today, the most important thing is energy is available in abundant supply. What do I mean by that? More and more crude is coming onto the market in spite of the cutbacks which came from some of the producers. Today, Western Hemisphere, more energy is coming on. You know, the industry requires adjustment, investment, etc. And also, a lot depends on the international price. If the international price falls beyond a little bit, which is music to the ears of someone like me, some people may not think it worthwhile putting large amounts of money in the E&P business. But these are all situations which we navigate as we go along.
Well, that's the word coming in from the Union Minister. But on that note, viewers, we'll wrap it up on this edition of Buy Now, Sell Now. Thank you so much for watching. Markets at Noon is up next.